Welcome back to Iraqi Dinar News, where we focus on real developments, real economics, and responsible analysis surrounding the Iraqi dinar. Today we're going to break down a concept that is quietly gaining attention inside economic discussions about Iraq, and that concept is the real effective exchange rate, often called the REER. At first glance it may sound like a technical academic term, but for anyone following the future of the Iraqi dinar, understanding this concept may actually reveal where Iraq's monetary strategy is heading and why many analysts believe the country is gradually preparing for a more advanced phase in its financial system. To understand why this matters, we first need to step back and look at how Iraq's currency system has operated for many years. The Iraqi dinar has been maintained under a managed exchange rate system controlled by the Central Bank of Iraq. Instead of letting the currency float freely against global markets, the central bank stabilizes the dinar by controlling liquidity and managing the supply of foreign currency, particularly US dollars. One of the key tools used for this has been the foreign currency auction system, where banks and financial institutions access dollars in order to facilitate trade and maintain balance in the domestic market. These policies were originally designed to stabilize prices after years of economic disruption and conflict. Maintaining stability in the currency helped prevent inflation from spiraling out of control and protected Iraq's foreign exchange reserves. For a country rebuilding its institutions and financial systems, stability was more important than rapid currency movement. But over time, economists inside and outside Iraq have begun discussing whether the country may eventually transition into a more flexible and modern exchange rate structure. That is where the discussion around the real effective exchange rate begins to appear. The real effective exchange rate is not the same as the number people see when they look at the dinar against the US dollar. Instead, it measures the value of a currency compared to a basket of trading partner currencies while adjusting for inflation differences between countries. In simple terms, it attempts to measure the true competitiveness of a nation's economy. If a country's currency becomes too strong relative to its trade partners, exports become expensive and less competitive. If it becomes too weak, imports become costly, and domestic purchasing power declines. For policymakers, maintaining a balanced real effective exchange rate helps keep trade flows sustainable while supporting economic growth. In Iraq's case, discussions around this concept are appearing more often because the country is gradually strengthening several pillars that are necessary for a modern monetary framework. One of the most significant of those pillars is financial digitization. Over the past few years, Iraq has been steadily expanding its digital financial infrastructure. Electronic payment systems are being introduced across government institutions and private businesses. Point-of-sale terminals are spreading through retail sectors. Government salary payments are increasingly being digitized rather than distributed as physical cash. Mobile payment platforms and banking applications are also expanding. This transformation may seem simple on the surface, but it represents a major shift in how money flows through the economy. Cash-heavy systems are difficult for central banks to monitor. When most transactions occur digitally, financial authorities gain clearer visibility into liquidity movements, consumer spending patterns, and currency demand. That transparency strengthens the central bank's ability to manage monetary policy and enforce compliance with international financial standards. Another reason this digitization matters is because Iraq has historically experienced strong domestic demand for US dollars inside its own markets. Businesses and individuals often preferred to hold or transact in dollars rather than dinars. By strengthening digital payment systems and modern banking infrastructure, policymakers aim to increase confidence in the domestic currency while reducing unnecessary reliance on physical dollars. This effort also supports Iraq's integration into the global banking system. International financial institutions require strict compliance with anti-money laundering rules and transaction transparency. Digital financial systems help track cross-border payments more efficiently, which improves Iraq's credibility with global banks and financial regulators. Alongside financial digitization, another important pillar shaping Iraq's monetary outlook is the growth of its non-oil economy. For decades, Iraq has relied heavily on oil exports to generate government revenue and foreign currency reserves. Oil remains the dominant economic driver, accounting for the majority of export earnings. While these revenues provide financial strength during periods of high oil prices, they also expose the country to global energy market volatility. When oil prices drop sharply, government budgets tighten and pressure can build on currency stability. Because of this risk, many economists have long argued that Iraq's long-term financial health depends on expanding sectors beyond oil. In recent years, there have been early signs of diversification. Agriculture production has been gradually recovering in certain regions. Construction and infrastructure projects are expanding as the government invests in rebuilding roads, housing, and energy networks. Telecommunications and digital services are growing as internet access spreads and private companies invest in technology. Logistics and transportation sectors are also gaining importance as Iraq attempts to position itself as a regional trade corridor connecting the Gulf, Turkey, and Europe. While oil still dominates the economy, these emerging sectors are important signals of structural change. A currency supported by multiple productive sectors tends to be more stable than one tied almost entirely to a single commodity. However, it is important to clarify something that is often misunderstood in discussions about currency value. Structural improvements in an economy do not automatically translate into sudden currency appreciation. Central banks rarely make dramatic changes overnight. Instead, they focus on gradual adjustments that protect economic stability and investor confidence. For Iraq, timing is extremely important. Even if policymakers believe the financial system is becoming stronger, they still have to consider a range of external and domestic conditions before making any major shift in exchange rate policy. One of the key factors they monitor is the level of foreign exchange reserves. These reserves act as a buffer that allows the central bank to defend the currency during periods of market pressure. Iraq has accumulated significant reserves in recent years due to strong oil revenues, giving policymakers more flexibility than they had during earlier economic crises. Inflation is another critical variable. If inflation rises too quickly, adjusting exchange rates could create further instability in consumer prices. Maintaining relatively stable inflation helps create the conditions necessary for any future monetary adjustments. Political stability also plays a major role. Exchange rate policy does not operate in isolation from the broader political environment. Government formation timelines, legislative reforms, fiscal spending decisions, and regional security dynamics all influence investor confidence. Central banks typically prefer to introduce policy shifts during periods of political calm rather than uncertainty. Another important area where Iraq has made progress is in strengthening its compliance with international financial regulations. Over the last several years, authorities have worked closely with global partners to improve transparency in currency transactions and enforce stricter oversight of banking activities. These reforms were particularly focused on addressing irregularities in dollar transactions and narrowing the gap between the official exchange rate and the parallel market rate. When that gap becomes large, it signals inefficiencies in the financial system and undermines trust in the official currency framework. Encouragingly, recent policy adjustments have helped reduce some of those distortions. When the spread between official and parallel market exchange rates narrows, it suggests that confidence in the formal banking channel is improving. That kind of stability is often viewed as a prerequisite before considering any broader exchange rate evolution. For followers of the Iraqi dinar, what does all of this actually mean? In the short term, the most realistic expectation is continued structural reform rather than sudden currency movement. Iraq's economic authorities appear focused on building stronger financial infrastructure, expanding digital payments, tightening regulatory oversight, and encouraging non-oil economic growth. These steps may not produce dramatic headlines, but they are the types of reforms that strengthen a currency's long-term foundation. The concept of the real effective exchange rate becomes relevant in this context because it helps policymakers evaluate whether the dinar is appropriately valued relative to Iraq's trade partners. If inflation, productivity, and trade patterns evolve over time, the effective value of the currency may gradually shift, even if the nominal exchange rate appears stable. In other words, adjustments to competitiveness often occur gradually through economic development rather than sudden currency revaluations. This does not mean that Iraq will never evolve its exchange rate framework. Many emerging economies eventually move toward more flexible systems as their financial institutions mature and their economies diversify. But those transitions typically occur step by step and are carefully coordinated with fiscal policy, banking reform, and international financial cooperation. There is also a geopolitical dimension to Iraq's economic future. The country sits at a strategic crossroads connecting several major trade regions. If infrastructure projects continue expanding and cross-border trade routes become more efficient, Iraq could strengthen its role as a regional commercial hub. Increased trade activity tends to support currency demand and economic stability over time. Long-term, if Iraq successfully expands domestic production and reduces reliance on imported goods, demand for foreign currency could gradually decline. That shift would ease pressure on the dinar and allow the central bank greater flexibility in how it manages exchange rate policy. However, risks remain part of the equation. Global oil price volatility, shifts in international monetary policy, regional geopolitical tensions, or delays in domestic reforms could all influence Iraq's economic trajectory. Responsible analysis must acknowledge these uncertainties rather than assuming predetermined outcomes. The most accurate way to interpret current developments is that Iraq appears to be strengthening the underlying structure of its financial system. Digital banking infrastructure is expanding, economic diversification is gradually emerging, compliance standards are improving, and foreign reserves remain relatively strong. These elements collectively build credibility for a national currency. But credible currencies are built over time through disciplined economic management, rather than speculation. For viewers following the Iraqi dinar, the key takeaway is to watch the fundamentals. Pay attention to economic diversification, banking modernization, fiscal coordination between the Ministry of Finance and the central bank, and the stability of Iraq's macroeconomic environment. Those indicators reveal far more about the long-term direction of the currency than rumors or short-term speculation. If Iraq continues advancing these reforms while maintaining stability in inflation, reserves, and financial oversight, the country will gradually strengthen the structural position of the dinar within the global economic system. And that process, while slower than many people expect, is how sustainable currency credibility is ultimately built. As always, we will continue monitoring real developments and breaking them down with careful analysis so that you can understand what is actually happening behind the headlines. Stay informed, stay focused on the economic fundamentals, and remember that this discussion is intended for informational purposes only and should not be considered financial or investment advice.